Good afternoon, everyone, or should I say good evening. And thank you very much for being loyal and sticking around for the last panel of the day, which is trading carbon markets. My name is Dominic Webb. I am a reporter for Responsible Investor, and I'll be moderating today. But more importantly, I am delighted to be joined by Ord Philippi, who is Director of Sustainability Markets at EEX, Florian Rothenberg, who is a Senior Analyst at ICIS, and we are going to be joined, hopefully looming over us, by Kavita Ahluwalia, who is Vice President and Head of Global Positioning at Uniper, who unfortunately cannot be here in person today. So thank you all three of you for joining me. Now, I want most of the discussion today to focus on the future of carbon markets, how we can best develop global systems and how this can help the energy transition. But I wanted to kick things off by taking a look back at 2022, which, of course, nothing of interest happened. Florian, how did EU markets react to the invasion of Ukraine, and have the after effects stabilized, or are we still seeing?
Yeah, I think the first thing that we witnessed was a massive sell-off in the European carbon market, also on the UK side as well. I think the reason for that was simply it was a massive risk-off event, and before this crisis event to happen, actually we saw a build-up of positions, of long positions. Also, the whole year 2021 has been super bullish year with the European Union promoting the Fit for 55 package, this massive climate package that actually enshrines the European emission target of 55% reduction by 2030 into legislation, and that of course lent a lot of support before 2022. But then this event happened and the market sold off, and the whole year was driven by a lot of uncertainty, a lot of volatility as well. On the one hand, fundamental uncertainty. What happens to emission? That's usually the big question. And what we saw in the power sector, also on refinery side, is an increase in emission. We had to burn more coal, refineries switched to fuel oil, for example. At the same time, we had a form of demand disruption because we had to move away from Russian gas. That meant the chemical sector, metal sector, they all decreased their emission quite significantly. And actually now, end of the month, we will see the effect of it. And the fundamental uncertainty kind of remains in the market. The other one is uncertainty around trading. I think margin requirement in the whole energy trading side has been a big issue, also a driver of the volatility in the market. However, I think the most important driver of volatility last year was political uncertainty. And directly after the invasion, and actually that happens every year, policymakers just demanded, okay, we have to stop this system, and we have to intervene in the market because prices are too high and we have facing a cost of living crisis. But in the end, I think this is the only factor of uncertainty which we don't have that much anymore, because now policymakers were able to agree on an ambitious reform of the European emission trading system. And also, like, the calls for intervention in the end, they led to like a very mild intervention into the market. So I think that uncertainty does not prevail that much anymore.
Okay, thank you. And Kavita, are you able to comment briefly on the global situation here? Was this a shock which was limited to just Europe, or did we see this in global markets as well?
And thanks, Dominic. Yeah, I mean, just briefly though, pointing to what Florian just said, I think that was an excellent summary. I think it's worth noting he's very, very correct. Those measures, those interventionist measures, they were circumvented by, and that was quite the effort by number of stakeholders at EU level. But we should be aware of the fact that this is a problem that we will probably see more of going forward, if of course situations like these persist. This kind of need for full control and basically coming up with kind of ideas for alleviation when prices start to climb. At the global level, no, it wasn't as drastic as with Europe in terms of the price situation. Voluntary carbon markets really took off, or at least last year were a huge discussion, of course, as part of the COP negotiations. We're going to see much focus on that as well going into the COP28 this year in Dubai, with Article 6 negotiations continuing. And overall, I think it's safe to say that we have quite the report out today from ICAP, the International Carbon Action Partnership, and carbon markets are definitely on the up. We basically have compliance markets, about 30 of them in place, in operation or under development. They cover about 1/5 of global emissions. And it's clear that there's a very significant role to play here, not just for compliance markets, but also for voluntary markets, to kind of pave the way for further emission reductions for those areas, regions that, for whatever reasons, cannot establish those markets yet themselves. So it's a very, I think it's a very kind of positive story that we're seeing develop at the moment.
Thank you. And Ords, I understand that there were discussions, allegations around market manipulation over the past year. Are you able to speak more about how the conversation around those issues went and how credible these discussions are?
Yeah. So, yeah, indeed, there has been some discussions about market manipulation. From our point of view, and at EEX already, we have a market surveillance, for sure, independent market surveillance department. We haven't seen any evidence of market manipulation in the carbon markets. And this, from our point of view, has been confirmed by ESMA as well, with a very, very thorough analysis on the carbon market, which was very welcomed, because it was really a very interesting piece of paper, basically, where, yeah, so no evidence of market manipulation whatsoever. What we could have seen, of course, is volatility, but we have seen volatility in all commodity markets, and I'd say probably, even not only probably, but surely, the carbon markets were not the most volatile when you compare it, of course, with gas or power. So I'd say there was a reason for this volatility. It was explained by the fundamental of the market and by some uncertainties, of course. So I'd say here, that's at least the global conclusion we had from that. The second point that was also brought was about the role of financial firms and if they were to be welcomed in the carbon markets or not. And here we also are fully in line with ESMA's view, who clearly said that indeed financial firms bring a value to these markets. They bring a value for price discovery, they bring a value for more liquidity in these markets. So it's very important that they can stay into these markets. What we have also seen is that some experiences where there was some ideas of non-letting financial firms, like I think in Korea also, didn't work out. So I think we are very happy that this debate is now kind of closed, I believe. And yeah, so I think one good thing about all this volatility and so on is that we had quite some focus from the political sphere on that, for sure. And this is aiming at even more transparency and even more oversight of this market, which of course we always welcome, as long as this enables transparency in the market.
Thank you. So I do want to move on to the future carbon markets now and the increasing globalization that we are seeing. So Florian, coming back to you, what lessons do you think other jurisdictions can learn from the EU experience?
Yeah. I think it's a bit the lessons learned from the beginning of the European system. And I think the first thing is you need a cap on emission that actually goes down. I think that's the first one. It has to be aligned with your climate target. And it also should be aligned with whatever overlapping policies like coal phase outs, renewable targets are in place. Otherwise, I think you enter with a system which is simply oversupplied. I think the other one, which is probably even more essential, is that you have a credible penalty system, that you cannot just avoid your compliance obligation. And the fourth key element is also, what compliance instruments do you allow in your market, and to have like a really elaborate decision about that. When you want to achieve your emission reduction target domestically, you should probably not include any voluntary offsets. And I think these are kind of the discussions that the EU also had in the past is it decades almost, yeah.
And Or from your perspective, what lessons can be learned and how can these trading markets best be optimized to actually serve the transition?
I'd say, yeah, the first thing is, that I think the EU ETS is a very well-functioning market at the end. We have seen that it's of course, the biggest cap and trade system that has proven to reduce clearly emissions in all sectors that were covered by it. And we've seen a real difference between what was covered and what was not covered in terms of cutoff in emissions. So we can really see that this have already been a great success. Of course, the general target that we would want to achieve is a global carbon price, which would be representative and so on. Here, I'd say we are not fully there yet, but we very much foster cooperations between the different regions. So, for instance, we are collaborating in the US, in New Zealand, and so on. I believe really this is what is absolutely key, that we can link the different systems throughout the world, so that at the end there can be emergence of a global price of carbon, basically.
And Kavita, from your global perspective, how realistic is that, and what are some of the challenges that remain for global integration?
Well, I have to admit, I do focus mostly on the EU side. So I wouldn't want to comment too much on things that I'm not too knowledgeable about. But linking is exactly for the reasons that Ol just mentioned, very, very cumbersome. You do need like common methodology standards, etc., and a base for discussions. Even the discussions with the UK at this point in time are proving quite difficult. So the hope would be there that the EU could get those kind of kind of as an example. Have a basis for further linking then in the future as well. It is a very, very difficult one to tackle, and no one wants to risk their own system at any given time. The EU has gone through, in the past 18 years, a very difficult initial phase, that pilot phase, 2005, 2007. Again, Florian being absolutely correct with the points they made. It was very much a learning phase. Many things they did not get right. There was over allocation, and these are all points that one would always wish to avoid. And it's now safe to say that moving forward, ETS is expanding in terms of, at least in the EU, further sectors coming on board. And again, there are further possibilities when looking at shipping, aviation, etc., for those international negotiations as well in future.
Thank you. And of course, I wouldn't be a true Brit if I didn't mention Brexit. Is this separate UK market what we might call a Brexit dividend? Opening this up to the panel, where do the discussions stand around linking markets, and what are the advantages of remaining separate at this time?
Yeah, I think as Kavita has mentioned, it's quite a cumbersome discussion. And I think from a design perspective, I remember in 2019 and 20, or actually when the UK ETS was proposed, we said, okay, anyway, like in our models, we keep it in a way that they will link it anyway at some point, because it's just a copy and paste job in the end from a design perspective. And we didn't expect them to be so fast, but they were so fast because they just copy and pasted most of the elements. But still, I mean, there's no discussion about linkage. And I think the further we go down the route, like with the UK making their own legislation, their own rules on the carbon system, I think almost the more unlikely it seems to become that they link it. And I think from a market efficiency point of view, like as an economist kind of, you just want the systems to be linked. And I think most market participants in the UK, they just want it to be linked because the liquidity is not really working in the UK system that well. And I mean, the systems are kind of indirectly linked anyway via the power interconnectors. And so there are like a lot of issues related to having like two separate systems with different jurisdictions, but still the markets being so linked. So I think overall, for the market, it would be a good thing if they are linked. I don't see a downside.
Yeah. I would agree with what you just said. I think we see that the indeed the systems are very, very much alike, and indeed there are some technical constraints that are impeding the further linkage, but generally we would also support that the systems are more closely linked.
Okay, and I want to turn to the carbon border adjustment mechanism. Florian, do you have any idea how this will affect pricing in the EU, and will it act as an effective incentive for adoption outside of the EU?
Yeah, I think what Kavita has mentioned as well already, I mean, we have see a bit of the expansion of carbon markets in general, which has been quite a steady growth in the past 10 years at least, globally. And I think CBAM definitely helps that. And I think carbon pricing now also is a part of the discussion in many countries. And again, and I think from an EU perspective, the relevant point is really it allows you to get rid of free permits to industry, which I think, while economically being almost equivalent, in fact, they're kind of undermining a bit the price formation and also the incentives in many cases. So they are not perfect as a system. They're required, but if you have a working CBAM, obviously that could be a better system in the long term if that works, and enable better pricing and price discovery in the market.
Here, I could just comment that indeed, as the price for the CBAM certificates would be equal to the auction prices, I at least would not expect something specific from this, but I'd say generally we are also very favorable to this new mechanism, so that it indeed, as Florian says, decrease the number of free allocation and so on. So I think this is for us as well a step forward. The other thing maybe to say is that it should as well incentivize potentially other jurisdictions to launch equivalent or other carbon markets. And we've seen that there are already some ideas in development at the moment that are probably linked to CBAM introduction. So I think this is good news.
And Kavita, where do the challenges lie in building out this global system? What are some of the barriers that we are facing?
Well, coming back to the CBAM point, though, for a second, because I do think that that's a really important measure or mechanism as well to get regions talking that previously had been maybe a little bit reluctant. So I view this as very, very positive, and anything that keeps industry in Europe as well and within the EU ETS and needing those allowances, that's also good for the EU ETS. So I think CBAM is actually a feat for those policymakers that have that worked on this policy piece. And I think in terms of globally, sorry, coming back to your question again, Dominic, apologies.
So what would you say the barriers are for this global build-out? Is it political? Is it economic? Where are the real hurdles here?
So in terms of further linking?
Yeah, further linking or the more widespread adoption of markets?
So the more widespread adoption is a question of, there's various different regions coming on board now, with notably Japan, and we've seen movements in New Zealand as well, various different ETS springing up everywhere. It's for every region as well to come up or to see what their local or regional aspects are that they need to take into account. I don't think one size fits all at all. I don't think you can take the EU necessarily as an example. Even within the EU, if you looked at the various different member state situations, very, very different. And to use Germany as an example, the industrial base made the need for free allocation, for example, an absolute must. Otherwise, there would have been no political will or buy-in back in 2009 when the first review was passed. So these are all things that then will need to be taken into account as more and more regions move forward with emissions trading systems. And then, of course, again, all those reasons or issues around linking and coming up with a global price, further negotiations at COP. I think there's a lot of headway being made now But as we've seen in the last couple of years, these are very technical discussions and very cumbersome ones indeed.
Okay, so I do want to move on to audience questions in a bit. We currently don't have any, so if you do have any burning questions for the panel, please do submit them. We don't have a microphone, unfortunately, so it will have to be on the website. But before we move to questions, Florian, the carbon price in the EU hit 100 euros for the first time in February. Where's it going? Up or down? What other factors might we see over the next year which will affect this?
Yeah, it's kind of unpopular opinion, but I think we, with our forecast, have been a bit bearish also over the past year. I think you always have to look into the long term. And I think we see also at current prices already quite a significant drive towards reaching that 55% reduction target. Especially given that the gas price that we have seen and which will prevail at an elevated level, at least for quite some time, it already sends quite a big incentive to move away from fossil fuels to invest in renewable energies. And I think in that context, we are neutral to bearish for the next years. However, I think there are scenarios in which higher carbon prices will be required. And I think this is like non-economic burdens, the non-economic barriers, permitting requirements for renewables, where of course the profitability there for low carbon technologies is there, but we don't get them up and running and fast enough. And I think that is the upside risk in the carbon market that we see at the moment. And prices could definitely also exceed levels of 100 euro then in the future, if we see that simply we cannot adopt at the speed required for the 55% target.
Okay, and I want to open this out to the entire panel. If we do see a high price, does this act as an effective incentive for the transition, or does it pull the capital which actually needs to be spent on transitioning away from companies?
So here, I would say from our perspective, it has been clearly seen that the EU ETS generally has proven very efficient to reduce the emissions in the EU. And I'd say indeed that then it would the money that went through the EU ETS was then for sure reused in a lot of different options, so funds and so on. But I'd say all serving basically the energy transition and a goal to get to a net zero at the end. So I'd say generally I believe that what we have seen, for instance, at EX is that throughout the 2000 auction that we operated in our platform, it was more than 142 billion euro that was then pushed into the energy transition and the net zero targets. So we believe it's already a really great achievement, and are very happy to contribute to that.
I might add, so in the power sector, it is all about coal to gas switching. And Florian's absolutely right in terms of the prices that we've seen over the past year. Incredible highs, notably the one that back in August, well over 300 euros per megawatt hour for the gas price. We've seen everything stabilized now since then. We're back at 40. But nevertheless, it is much higher. It's a much higher level than previously seen before the commencing of the war. So based on that, and obviously the switching possibilities then becoming more finite as we move forward, it's inevitable that as the possibilities become less and less, that will send that last marginal bit of generation, then it will send those CO2 prices upwards. In terms of energy intensives, it's always a question of, again, what do you wish to substitute, and products such as hydrogen, green hydrogen as well, then in future, if they are to become a reality in terms of production methods, if that's to be driven by the CO2 price, then we would see CO2 prices at levels where the political will or the buy-in of other stakeholders might indeed be questionable. Hence, ideas such as carbon contracts for difference that are being discussed in earnest for example, in Germany now, especially for the steel sector, can perhaps provide the necessary certainty for those sectors to make those investments going forward, and then kind of provide that alleviation then also for other participants in the system, given the fact that the state would, of course, pay the difference. So these are kind of ideas floating around, but I'm with Florian at the moment that those €100, there might be an upwards trend. It's all possible. We do have a very bullish trajectory now as part of the agreed ETS reform, 62% by 2030 compared to 2005 levels. And that's even slightly more than the Commission had put forward. So very much a kind of a bullish perspective. And of course, further sectors, of course, coming on board in future. And then that ETS2 as well from 2027 or 2028 onwards for transport and buildings. I'd leave it at that.
Thank you. And I don't want to let this panel go by without also talking about voluntary carbon markets. And we have very helpfully just had an audience question to that effect, which goes, investigations and whistleblowing on intransparency, overselling of impacts, middlemen getting rich with little money funneled to projects. Will the latest scandals kill the voluntary market, and what role does it have going forward?
I mean, just coming from a compliance market perspective here, I think the EU ETS has kind of, or the European legislators have learned their lesson with voluntary markets. And I think they will probably be in the future very careful. And if you think about the role of voluntary markets in general in the EU, I mean, cap and trade by 2030 will probably cover around 76%. I think that's, if you take 2020 emission of all scope 1 emission in Europe and 95% of all energy related emission. The question is, like, for European producers, what is the role there really of voluntary? I think they probably in the overall energy transition worldwide, there is definitely a role for that to play, but maybe Europe is not the key market. So that's just the broad analyst perspective from an EU. Not sure what the others think about it.
Yeah, what I would say is that generally we believe that voluntary carbon markets are always kind of a first step before going into more like compliance markets. I don't know, having worked also on guarantees of origin and green certificates, it was first green certificates that were not fully regulated and so on, and then progressively regulation came on top. I'd say for us, voluntary carbon markets are are an opportunity, are a way to reduce emissions. But for sure, the goal and the aim should be more towards compliance markets.
Thank you.
And I would simply add, that Order's absolutely correct. It's kind of a first step to compliance markets. And from certification point of view, even the EU is kind of slowly but surely again testing the ground, having had very not great experiences in the past. So around voluntary carbon removals, coming up with that robust MRV again is going to be really key. But fact of the matter is that with the 6th IPCC report having been put forward, synthesis report having been put forward this week, I think it's all clear for us that if we are to in any way remain within reach of 1.5 degrees, obviously surpassing that target now by the looks of things, then further reductions and of course technological and of course nature-based ways of handling emissions will be really, really important in terms of those reduction measures. So to have schemes that enable that will be really, really important.
Thank you. So we do have one more question, which I don't know if our EU experts will be able to answer outside, but which carbon markets other than EU and California do you see as up and coming in terms of having sufficient liquidity, accessibility, etc.?
Sorry, is it?
Anyone feel free to comment on this?
Which other markets other than the EU and
California.
California? I mean, it would be, I mean, it's a bit of wishful thinking, but if we had a Chinese market which had similar rules than the EU, that would be a great first step. I mean, would be by far the biggest market. I think right now the rules are just very different. And I would not say it's up and coming, but like looking at those countries that have simply large emissions, I think that definitely makes sense. And then also with a stable policy framework, I think that's the other question. And I think, but I can't pick out one market right now, honestly.
Yeah, from my perspective as well, China for sure, as you just said, is for us the big market. So, but to pick one really is complicated. So, yeah, I fully agree with you.
Maybe Japan is maybe one to watch as well. Again, it's about the level of emissions, and then of course everything around the standards put in place, how much free allocation or how much auctioning one goes for. So those are all things to take into account. Of course, California being very, very prominent.
Thank you. And to close us out, maybe in 30 seconds to a minute, we come back here in 2024. What do you think will be the key topics that we will be discussing, the key conversations that will have been had over the year?
Yeah, 2024 and 5 will probably everything that comes after 2030. So aligning the EU ETS with net zero, or at least with the 2040 target. I think super interesting discussions. I think we had a bit of this expansion already last year with like now buildings and road transport and small industry being covered, but then inclusion of removals. How high will be the target for 2030? I think that 40, that will be like the key topics in the next 2 years for sure.
Yeah, I think we have quite a packed political agenda already with a lot of new things coming up. And for me, this is really kind of a bit very positive, but also challenging, meaning like the inclusion of all these new sectors, like maritime, for instance, but on top of the second EU ETS on road transport and heating, the CBAM, as you mentioned, I think we have quite a lot of to-dos in this sector, and that really looks very promising to further decarbonize our industry.
Yeah, we'll have to see, I think, in terms of with inflation on the rise and prices in general, the strain that the electorate will feel, people across the EU, but also further afield, how they then take to or any kind of elections and how they voice their concern, and what, of course, the reactions then are from policymakers. Those measures that we just mentioned, especially that ETS2 for the transport and building sector, there's a lot of ifs there still, question marks on how that would be implemented. And we've seen it came under a lot of fire last year as well. So I imagine we'll probably be having those discussions as well, depending on how, especially at European level, this emergency situation develops. Right now, we've come out of a mild winter. The continent as a whole has managed exceptionally well with high storage levels, gas storage levels. But of course, we do not know what things may bring with the commodity markets in general. And again, how then carbon markets might react in potentially in line with those. So those are all things to watch.
Well, thank you all very much for joining me. That's been a really interesting discussion, and I will try not to keep you from your canapés and champagne unduly. So please say thank you to my panelists for a wonderful debate.
Thank you so much.
Thanks.
Thank you.